3.6 billion people log into Meta's family of apps every single day. This chart shows top-line revenue hitting $60.8 billion for the quarter, climbing sharply upward, while bottom-line net income simultaneously drops. Management is deliberately squeezing its historical 43% profit margins to aggressively fund a highly expensive pivot toward artificial general intelligence. Mark Zuckerberg reports that artificial intelligence is already accelerating the core advertising business and creating new enterprise opportunities. Meta is shifting its identity from a consumer software platform into a primary builder of B2B enterprise AI compute and hardware. Building this new hardware ecosystem carries an immediate penalty, reflected in Reality Labs posting a massive $4.6 billion operating loss for the quarter. Attempting to establish a lead in the next generation of enterprise hardware requires a high-volume cash burn today. Looking at the total corporate ledger, top-line revenue exploded by 28% year-over-year to reach $60.8 billion. Despite that massive revenue growth, net income dropped 14% to $15.8 billion, driven by a 55% surge in operating expenses. Some of that expense is temporary, including a $2.4 billion charge for legal proceedings and $1.18 billion in severance from May headcount reductions. The structural drain on cash comes directly from capital expenditures. Meta spent $31 billion in a single quarter to build out its AI infrastructure. This animated graphic shows the resulting leverage on the balance sheet, where $83.6 billion in long-term debt now nearly balances against the company's $90.2 billion cash pile. The immediate impact on liquidity is stark. Free cash flow plummeted to $784 million. Meta's capital-light software era has ended, replaced by a hardware-heavy reality requiring immense debt to sustain. The foundation holding up this infrastructure burn is Meta's legacy advertising business. This chart tracks Meta's core ad metrics for the quarter. Ad impressions climbed by 14%, while the average price per ad concurrently rose by 12%. This dual increase demonstrates pricing power in a digital advertising market where many competitors are struggling to maintain margins. If the AI gamble pays off, this spending secures a significant competitive advantage. If it fails, that $83 billion in leverage remains a massive structural risk.